Hey traders, Raghee here, and let's take a look at gold here in this video. We're going to talk about where we are in gold, the overall market trend that we have in gold, and what setup that I see forming for a very, very near-term opportunistic short. All right, so first of all, let's give gold some context and talk about the fact that overall, despite what has happened recently, there's no doubt that since 2018, end of 2018, early 2019, this has been an overall long-term move higher in gold. What's notable about the volatility that we see right now is that volatility did cut through the 200 period exponential moving average. So that in and of itself is pretty remarkable, because for most of this rally, for most of this ride higher, we've been surfing that 200 EMA from time to time. Now, if we were studying, and I know many of you probably are, and you know that I am, if you're studying Charles Dow and you're realizing that we've had bits of an uptrend, distribution, uptrend, distribution, uptrend, well, this is actually very dramatic, but it's distribution all the same. What is distribution? It's a wide, choppy market. It is not a downtrend. And so that's where a lot of traders have a very sort of binary look at the market. If it's not moving up, well, then certainly it has to be down. And Charles Dow would have told us that we have a lot of this before we sometimes get that again. And that's really what we've seen since Q3, Q4, 2018. So why would I suddenly change the rules? And the fact is I wouldn't. I want to acknowledge why the market's been more choppy, liquidating gold in ways to raise funds. This is where the volatility that we're suddenly seeing is creating a lot of margin calls and a lot of headaches for hedge funds, and they liquidate gold to raise capital. So the moves lower in gold make sense when they are lined up with a look at the equities markets, and the big down days in the equity markets line up with big down days in gold. So gold is in distribution, but with an overall previous trend, overall psychology, it still is up. So this is the bottom of the range, and this is the top of the range. The way that we took off today, sudden move, really big move to the upside, I'd like to see a little bit more follow through tomorrow, maybe to about the 1580 area. And then I'd like to buy some puts in GLD just for a quick move to the downside, where yes, in this area, I can be a bit bearish, but that if we revisit this area again down in here, I want to be buying gold once again. So think about the momentum. This is bullish. I'd like to short or buy puts into that kind of bullish momentum. And then think about heading back down, bearish momentum, and even more specifically, heading back down into support, where I'd like to buy some calls in GLD or calls in GC, or get long the micro GC contract as we get to the zero of my V score and build a long position all over again. So kind of a little back and forth, but remember, you're a trader. You can change your mind. I could be long at the bottom of the range and shorter after a significant move to the upside. I can also be short up in this area if I get the right type of confirmation. So, don't stay rigid to one side of the market if it's in chop. Because if it's in chop, that means you don't have a dominant psychology that's ruling the current market trend, but we can trade or have a bias to the long side, which I actually do because of the trend that was, the preceding trend. So I hope this helps give you an idea of longer term plus shorter term. So longer term, I'm very bullish gold, but off the bottom of the range. Short term, I wouldn't mind a nice little pullback here. So that being said, let's see how this goes. Be patient, and I'll see you in the next update.